Good morning and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin and I'm here with my father, Carl Swenlin. We are going to give you the charts that we think you should be looking at going into this week. We would love for you to come check out our website, DecisionPoint.com. We have two reports there, the DecisionPoint Alert, which will give you the overall market overview. And then we have DecisionPoint Diamonds, which finds stocks that will ride that tide that we've discovered when we have gone through the DecisionPoint Alert. The Q&A box is for you to send us your questions and comments. And the chat box is also for you, but it is only for you to talk amongst yourselves. I do have a moderator in the room, Fred, who will welcome you in there. Just remember that when you're in the chat room to use the drop-down menu above your comment so that you can send it to everyone. Otherwise, it just goes to us and we don't look at the chat room messages. All right, I think that pretty much covers it. So, Dad, I'm going to hand it over to you and tell us what's going on. And did you have anything you wanted to cover to start?
Okay, well, how about welcome to the 1970s. OPEC raising, or actually, well, they're raising prices by cutting production. We lived through the 70s. It wasn't any fun, gas lines, etc. But here today, our energy sector is up almost 4% at this moment, and it's been higher than that today. One of the things that I've noticed, though, is everything started out up today, and now it's easing back. Here's the mid cap index. Here's the small caps, the Russell, NASDAQ 100, NASDAQ Composite. New York Composite is up. How about that? Well, that's because it's like the Dow, it's got a lot of energy stocks in it, whereas the NASDAQ doesn't. And the SPY is just slightly higher right now. I discovered a couple of websites that I'd like to pass along. First of all, in John Malden's weekly free newsletter, he had this chart of Truflation. It's a website that updates the inflation rate daily. So it really gives us some context, whereas when you get these announcements on the news, it really, you can't put it in context. So here's a 1 year presentation of the daily inflation rate. And you see it's popped up a little bit here. The main thing is if this gets all the way down to zero, all that means is it's not rising anymore, and we're still stuck with the inflation that we've gotten since it really started moving higher. Another one is the Case-Shiller Home Price Index. That's on realestateDecoded.com. And this shows where we were 2009, 2007 area. And you can see this is, this is not with inflation, but this is just overcorrected thanks to the Fed with those ridiculously low interest rates. Here is inflation adjusted, but it's still higher than it was before the real estate crash. I don't think this does us any good. Remember, people that have been buying homes in this area are going to eat it unless they're independently wealthy. If you own your home outright, it doesn't matter what happens to the prices. You may get less when you sell, but you can buy an equal house across the way, pretty much. So let's start with looking at the SPY. Okay, it's right now it's looking like a shooting star, which is bearish, but just remember with whatever you're looking at on an intraday chart, nothing's final until the close. So we don't know how this is going to work out. Let's look at some indicators. New highs and new lows. We're getting an expansion of new highs, which is at this point, it's lower than it was over here. That's not really good. This price is higher than here, so this expansion should be over this. So that's at this point a negative divergence. Oh yeah, I wanted to show you something. I've been trying to track the relative strength of the SPY, which is a cap-weighted index, versus RSP, which is an equal-weighted index. This shows that let me get my pointer going here. This shows that SPY was stronger than the equal-weighted index. Right now, it's backing off. Why do I want to know that? Well, for one thing, it tells you which is performing better and which one you might want to own. But it's just one of those things I plug into the background and watch, so I don't have to wonder about it. Our climax assessment chart, it's been very interesting. We had a upside initiation climax. We got nice price follow through, and then we got an upside exhaustion climax on Friday. So we may be seeing the results of that. This OPEC announcement after the close on Friday is really turning things up. So we don't know how it's going to settle down. The climaxes just they're exhaustion events, and you want to look for some churning to follow. Our short-term indicators, this is peaking out, but you can see here that the making a high on this index doesn't really stop it from going higher. So it could still move, the market could still move higher. Our intermediate term indicators, they've been moving up, and these are our as of Friday, these are end of day indicators. And don't know what's going to happen here, but obviously the intermediate term is moving higher along with the short term. Short term is overbought, so there might be a pullback. The dollar is down today, so we would expect gold to be up, which it is. Let's just take a little further out, look at gold. We've got a nice rise off of this double bottom here, and this is looking like a pennant to me, which is a bullish, but it's kind of skewed to the upside, which is really not, it's less bullish, but at this point we'll look for higher prices with gold. Oil, USO, up 5.5% at this point today. Bonds are rallying. I'm not sure what that's, how is so, but it is, which means yields are moving down. We've got really good support at this level here, so I'm not sure it's going to hold, but you've got some good support there. Looking at all our yield array, again, there's support and their So far, holding above that with really retesting. Obviously, we're going to get close to a retest again today. Energy we saw. Tesla pulling back today. All the large cap tech stocks are having a pullback, which is another thing that accounts for the S&P not doing as well as the Dow. The Dow is skewed with energy stocks, whereas the S&P is skewed with large cap. This is an object lesson. This is the Nikkei index for Japan. Back in the 80s, parabolic advance, it crashed out of that. And it, because of their policies of interest rate, et cetera, it still hasn't recovered. Erin, I think you're going to have to take over. I'm losing my voice here.
No worries. Okay. Let's look. So we've gone through some of these averages. I'm sorry, I was working in the chat room. Fred's not there. Did we need to go through we finished Bitcoin and all of those, right?
No, I haven't done Bitcoin.
Okay, cool. Well, let's get to it then. Okay, so Bitcoin, formed this rounded top, and then we got the breakout, and the expectation really off this rounded top was a decline. So that was good news for Bitcoin. But as you can see, the PMO is now turning. We're just about ready to get a sell signal, and now it's starting to round off once again. Could turn into somewhat of a double top, kind of messy, but a double top nonetheless. But indicators, the PMO and stochastics are suggesting that Bitcoin is going to come down and test this support level. The dollar.
I did that.
Okay. Thank you for the help there. Did you get through gold?
Yeah, I've been through everything except, I've been through pretty much everything, that I used.
Okay. And gold miners?
No, I didn't do that.
All right, gold miners. I figured that they would have trouble here at this area of overhead resistance, but they're not. So that's really good news. We can see that the participation for gold miners is, as good as it can get as far as stocks above their 20 and 50. The concern, of course, would be, that they're overbought. However, notice that they can stay overbought for some time if it's in a nice bull market run. And it certainly looks like that's what we're experiencing right now. The question is if we do break above this resistance, where is the next level of overhead resistance going to lie? And look at this beautiful cup with handle too on gold miners. Very pretty. So the next level of overhead resistance would probably be in this area here at this top and this gap right there. You can see they kind of line up together. And that's another 8% move to the upside. So I don't think it's really that late. It's not too late for gold miners at this point, but certainly we've gone through most of this rally. So they look good. Gold looks good still. So I'm expecting them to continue higher, but they really need to digest this rally. So we could see a little bit of consolidation. We talked about oil, so I don't know that I need to talk about this chart. Yeah. TLT.
Yeah, I talked.
So what are you thinking about interest rates? Did we look at the interest rate chart? I apologize.
Yes, I've done that.
Okay. All right. I'm sorry I wasn't paying such close attention. All right. Well, let's go ahead then and go into the sectors. First, I wanted to look at the dashboard here. So as we can see, we talked about energy and the OPEC lowering their production level, which, obviously supply and demand. If you have less supply, the price is going to go up. Consumer discretionary and technology is certainly falling in the low part here. I talked about real estate. I'm going to talk about it again. I talked about it this morning in the Your Daily 5. I did record one of those, so you can look for that. It'll probably go up in another hour on the StockCharts TV YouTube channel. And since I'm talking about the StockCharts YouTube channel, remember that if you can't attend live the free trading rooms, or if you miss them for some reason, they are posted, produced and posted by around noon Pacific time on the StockCharts TV YouTube channel. All right, so let's dive in and look at the sectors a little more closely here. Oops. All right. I apologize, they're really, really tiny right now, but I'll be diving into these a little more closely. The main thing is I want to get this sort of back view so we can see what's happening with momentum on all of the sectors. And as you can see, momentum is rising on every single sector. We have new PMO buy signals on industrials, which you can see is making a nice little run to the upside right now. The materials sector has a pretty new PMO buy signal, but I can tell even in this little teeny chart, I can see we have a shooting star. And real estate also a new buy signal, and you can see a buy signal coming in also on financials. I know we need to talk financials just based on what's going on now with the banking and see where that's kind of led us as far as the financial sector. But the rest of these, all of them are showing that rising momentum. We do see a lot of breakouts above 50-day and 200-day EMAs, which is positive. Comp services, notice that it's been well above all three of its key moving averages for some time. Same with technology. You can see how those moving averages are all moving up. Very, very bullish to see that kind of a setup there. Healthcare having a really nice breakout today. I might want to look at that one too. But let's go ahead and we're going to dive into these sectors and look at them a little bit more closely. Oh, hang on. I got to get to the right one. I have two lists for sectors. All right. Okay, so here is comm services. Like I said, we're looking at really nice configuration here of the EMAs, working to get that 50-day above the 200-day EMA for a golden cross. A little bit of margin still left to go to close up before that signal is likely to happen. The participation under the surface on most all of the sectors is still looking very good. And you can see that comm services have continued to expand as far as their stocks above their 20 and 50, as well as above their 200-day EMAs. Notice that big spike here of the improvement here to almost 2/3 of comm services reaching above their 200-day EMAs. This is something I think is going to be important for us to pay attention to, though. We've got all of these sectors with rising momentum. So how do we figure out which sectors we want to be a part of? One of the things we're going to want to pay attention to is relative strength. And comm services, while we're seeing really good participation, is not performing that well relative to the overall market of the SPY. So probably not the best area to go fishing in, but still room. Consumer discretionary, we can see the 20-50-day EMA silver cross is what we call it. We see a 20 move above the 50. And so that was positive, but we're still struggling a little bit here with overhead resistance for the declining trend. Expansion in the percentages above 20 and 50, really moving nicely to the upside. We can see as far as relative strength, I would say performing mostly in line with the market right here. So for the past few weeks, we can look at where it was back here in mid-March, and we're almost to that same level as far as performance. But overall, you look at this, pretty much moving in the line with the SPY. Consumer staples has been, as I mentioned it to my subscribers before, quietly rallying. We haven't heard much about consumer staples, but they've certainly been having a nice run as well as technology has. So we're starting to see some nice movement. If you recall last Monday in the trading room, we were looking at a nice little breakout here for consumer staples. Pretty nice setup here as far as the participation above 20 and 50-day EMAs. So that's looking very bullish. Stochastics above 80. But again, we've got now a sector that's performing mostly in line with the S&P. It'd be nice to find one that's outperforming. For energy, certainly seeing the outperformance. So this is an area that looks interesting. I did see a question come in about whether it's too late to add energy at this point. I would be waiting just to see if this doesn't turn out to be a reverse island. More than likely, this is a strong breakaway gap, which means we are going to see some follow through to the upside for the energy sector. And I imagine with crude oil getting a spike, that the rest of the sector is going to continue to do well. You can see that the expansion above the 20-day EMA is just shot right up there. But we're also seeing improvements as far as stocks above their 50 and their 200-day EMAs. So
Erin,
I don't think it's too late for energy, but
Erin.
my sense. Oh,
I wanted to point out we had a double bottom on price there at the beginning of last month now.
yep.
But you notice how it came out of the second bottom, it was trickling off. It looked to me like it was going to top out, be stopped by the 50 EMA. And thanks to OPEC, it's boosted up. So anything that would mitigate the problems with OPEC would probably cause energy to come back down some.
Absolutely. So I don't think it's necessarily too late for the energy sector, but I think that we're missing some key information at this point. And seeing a big breakaway like that, certainly, winners keep on winning. It's more than likely a breakaway gap, but upside potential has really been shrunk because of this big move. We're looking at about 6.5% to the upside before we hit overhead resistance. So while it's probably not too late for energy here, I think it's going to be due for a pullback very quickly, which would make a better entry. And like Dad said, we are still waiting to see what, resolves as far as OPEC goes, because any whisperings one way or the other, we know how the market reacts to whispers. So we need to be prepared for that. Financials. We've spent a lot of time talking financials over the past few weeks for obvious reasons. We do have a double bottom that is set up here, but we have a lower low on this bottom, which leaves me a little less excited about that particular formation. PMO buy signal, certainly we're seeing an expansion in participation. We'd like to see participation over 50%. That's kind of our bullish threshold. And you can see that we're not getting that stocks above their 50 and 200. We still need some work. There's still work to be done. And it is performing in line with the SPY, actually kind of tapering off here, underperforming. So not really an area I'd want to be involved in. I personally still hold an inverse on financials, might be letting that loose, but I'm still not feeling very confident about what's going on in this sector. Healthcare making a move to the upside, really nice breakout today above the 200-day EMA. You can see that we were already getting some nice expansion in participation. Look at the Silver Cross Index. The Silver Cross Index measures how many stocks have a 20-day EMA above their 50-day EMA. And while it's not at that 50% threshold, you can see that it is improving very quickly as more and more stocks get above their 20 and 50-day EMAs. And relative strength, petering off still. We're getting a little outperformance today, but overall not a group that necessarily you want to go looking in. Industrials performing pretty much in line with the SPY, although just of late starting to taper off. More than likely, if we do see a nice move on industrials due to energy, the outperformance will likely begin, but currently traveling mostly in line with the market. Double bottom, it confirmed and is almost, gosh, it's almost up to that minimum upside target. But I would be looking for price to test the overhead resistance here at these two tops from February and March. All right, materials. Where is the outperformance? Well, materials is one of the places we're seeing some nice outperformance. Stochastics above 80. Look at the expansion in participation in the materials sector. The Silver Cross Index has given us a positive crossover, which is very good for materials. Like I said, that outperformance is what has me very interested over here in materials. A lot of this probably having to do with gold doing well. Real estate, like I said, I'm going to come back to this one. I wanted to talk a little more about it in more detail. Technology, again, expansion and participation. Notice that Silver Cross Index is rising. It's above its signal line, which is very positive. 60% above their 200-day EMAs as well. Looks like there's still some work to do under the surface, but really looking nice here for technology. I would just be a little concerned. We are getting an upside breakout from a bearish formation. And while that's especially bullish, it's still a tiny breakout. I think that with it hitting support or resistance like this, there is a pretty good chance we're going to see a pause, if nothing else, here on technology. Notice that it is performing in line with the S&P. Utilities, and then we'll go back to real estate. You can see, again, participation expanding. All of these sectors are seeing some nice participation. Price, I do not like that it can't get above this 200-day EMA. That has posed a problem since January. So that's an issue for me. And again, the outperformance going on here, pretty much traveling in line with the S&P. Still looking positive under the surface. Like I said, if you're holding a utility, I don't think you have to be overly concerned, but certainly not as strong as some of these other groups. So real estate, why am I coming back to real estate? This sector has been really beat down. And so I like to find those beat down stocks, and I like to find the beat down industry groups and sectors when they make the turn. I like new momentum. That's kind of my thing. I'm a momentum trader. So you can see we got the PMO buy signal that came in last week. RSI is now back above 50 net neutral, which makes it positive. The Silver Cross Index is now starting to rise, but it is at a measly 3% right now. But looking at the expansion of stocks above their 20 and their 50, I mean, almost straight up. Really nice movement going on under the surface here for real estate. Stochastics above 80. And this is the key. We have outperformance against the S&P. So to me, this is a sector we might want to pay attention to. It is struggling at the 50-day EMA, so it isn't smooth sailing at this point, but this is the kind of sector I'm looking for. You can see also a positive OBV divergence. You've got a higher high on the OBV and a lower low on price. So that's a good sign as well for real estate. Let's dive into some of those industry groups before we get into our symbol requests. And again, I talked about this during your daily 5. I mentioned that you might want to go to the industry summary and look at the industry groups that are part of that sector to give you a sense of, okay, this sector seems to be doing well. Where is the strength? Not in diversified REITs. So you can see hitting the 20-day EMA and failing. But looking at all of these others, a lot of them breaking out above key moving averages. This one's still struggling a little bit beneath the 20-day EMA, but certainly enjoying a nice ride to the upside and a PMO buy signal. Struggling a little bit at the 50-day, but again, a really nice rally to the upside, PMO buy signal. Same. PMO buy signal. So you can see all of these have these new PMO buy signals, which is what interests me. And that's where I'm going to be looking in those groups to find my stocks that will hopefully ride the tide of the real estate sector starting to look good. Again, another move to the upside. You have a lot of these EMAs and they are configured bearishly, okay? Because this sector has really taken a beating. So you're going to see a lot of these negative configurations on EMAs, but that's something that we have to take a little bit of risk on if we're going to go for that new momentum and look at these beat down stocks. But that does increase our risk level, so we need to keep that in mind. Residential REITs, also nice move, PMO buy signal. Specialty REITs, nice rally, PMO buy signal. So you can see that this particular sector does have a lot of strength under the surface. You know, it's one thing to have a sector doing well with one or two industry groups leading. It's an entirely different thing to see a sector leading and then also note that most of the industry groups within are also doing well. I'm going to take a quick peek through materials because we did see that one was looking good. Aluminum, we're going to note, right? What are the crude oil related things? That's going to be up in energy, but what are those that are related to gold, which has been doing well? Not aluminum, and aluminum is failing here at that 20-day EMA. Commodity chemicals looking good. New silver cross in the making here with that 20 crossing above the 50. So commodity chemicals looking positive. Nice breakout above the 50 here for containers and packaging. This sector looks a little less risky simply because most of these are above their 20 and 50-day EMA, especially chemicals looking good. Gold miners we've talked about, or this is metals and mining, nice breakout above the 200-day EMA. I presented a mining ETF for ETF day for DecisionPoint Diamonds last week, and I'm pretty pleased with how that's turning out. You can see that non-ferrous metals also doing well above the 50-day EMA. Gold mining, really nice move. We talked about that one already. Steel struggling a little bit here at the 20 and 50-day EMAs, but that PMO is giving us a buy signal in just a moment or two. And I like the look of steel. Paper, not looking quite as good, struggling beneath the 20. We do see a PMO buy signal on tap, but stochastics are rising, but they're still below 50, net neutral 50. So paper not looking quite as bullish as some of these others. And then quickly, just passing through energy, you can see all of these, all crude oil related, are all making big moves to the upside today because crude oil is up. And coal doing okay, but that you can tell is not, it's doing well because it is an energy, but it does have overhead resistance appearing. Clearly, the things related more closely to oil are looking more bullish. All right, that is our sector to watch and our industry group review. So now it is time for those symbol requests.
Okay. One thing we probably should mention is we had some difficulty this morning, which is maybe why I sound so disorganized, but Zoom is supposed to send out email to people who have registered for the webinar, and they didn't. So we've got about half our normal participation level at this point. And
yes,
we need to make sure that people know they can use the same link to get here every week.
Yes, the meeting room does not change. It's been the same for, since I started this trading room 2 years ago. So it hasn't changed. You can always use the same link. So if you saved your registration, you can always enter through that link or write down the meeting number and you can use the join link from the Zoom website.
Okay,
all right.
Symbol is SYM.
Symbiotic. This is a prior diamond. Looking nice. It's definitely maturing the way we would want to see it mature. I'm going to try and make these bigger. I forgot to do my screen since we were having all those problems this morning. Okay, so hopefully you can see that clearly. Really nice look here for Symbotic. PMO is now moving back up. It had started to fail here on this pullback, but boy, I don't know about you, Dad, but this looks like a pretty much a textbook flag formation, and we are starting to get the breakout from that flag, which would suggest we're going to get a rally about the size of that flagpole. So we're getting the breakout. If we get the break above this intraday high, I'll feel even more confident about it moving higher. But I like the look here. I don't think it's too late maybe to get into this stock. And why I'm pulling up a 5-minute candlestick chart, I wanted to do this because this is a trading room and I wanted to explain the best practices, at least for DecisionPoint, as far as how to enter and exit a stock. So I pull up a 5-minute candlestick chart. I have the RSI, PMO, and on-balance volume. A conservative buy point is when you see a 5-minute PMO crossover combined with a positive RSI. That is considered a conservative buy point. A sell signal is anytime the PMO turns over, because I don't know about you, but when I'm ready to sell a stock, I need just any excuse. And a PMO turning down, a 5-minute PMO is the perfect excuse. So we can see we got the buy point. It already came in, and notice the increase in volume as we're going through, as we're seeing this rally move. So this one definitely has the interest. As far as buy points, I think you're kind of out of luck here for today, unless you want to buy a lot higher. But the PMO is overbought. It does look like it's decelerating. So we might get a little bit of a pullback here, maybe to this level of support, at which point you might have a better buy point.
YPF.
This is another prior diamond. I must have some diamond members in the room. All right. It's having a great day, as with anything that is crude oil related. PMO on a buy signal. I like the way relative strength is working. It's strong against its group, so that's why it's performing better than the S&P. Overhead resistance was right here, and it's been broken. The next level of overhead resistance is right about up here. So that's about 10% away. So there's still a 10% upside target on this one. We've got a PMO that just hit positive territory. I think this one has more upside to go. But as we were talking about crude oil, a lot of the reason it's up so high today is because of production being cut by OPEC. And if they change their mind, if something switches, that is going to change the price of crude oil very quickly. So you do need to be aware of that.
Yeah, this is
I think
really
YPF looks
things
good.
up. It's really good. There's potential for a lot more disruption here before this works itself out.
All right, here's the 5-minute candlestick for YPF. The buy point came in, not here, because the RSI was negative. It came in, boom, 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 right about here when the RSI went positive. So that was pretty much on the open today. You were kind of stuck with, actually, it was right on the close on Friday. So right in there would have been the last great buy point, of course. Getting back down there, I don't think we're going to see that. Let's see, the PMO flattening because we've got a steady rising trend. I would be trying to get an entry down here. I think that it's getting ready to, it looks like it's still going to consolidate sideways. I think that would be my target, would be about 1136.
QQQ.
I should pull up our golden cross chart for QQQ.
Yes, you should. Yeah.
Yeah. So here is the QQQ, and we have under the hood indicators for the QQQ. So we can see how many stocks are above their 20, 50, and 200. We have the Silver Cross Index, which again measures how many stocks have a 20-day EMA above the 50-day EMA. Whenever you see the word index on, it's a market indicator, and that it's made up of components. Okay, that's why it's called an index. So for example, we have the S&P 500, it's an index, it's made up of components. The Silver Cross Index is made up of components. The component is how many stocks have a 20 above their 50. So don't confuse it with the Silver Cross of an individual stock or index like that. That's your Silver Cross here. The Silver Cross Index is telling us how many within that particular index or sector have a 20 above their 50. And I really like this positive crossover for the Silver Cross Index. You can see that the Golden Cross Index is rising. It's above 50%. Both of these are, so that's a bullish reading. And with participation looking this strong, we're going to continue to see both of these indicators rise. So I'm liking the look of the QQQ, and we did get above this area of overhead resistance. And if we go to the next level of overhead resistance, it's only about 4 to 4.5% away. So we do have, while we have some upside, available to us on the QQQ, it is rather limited based on where we're going to see the next level of overhead resistance. But I like what I'm seeing here. I mean, it's hard to talk bearish about an index that has this kind of participation under the surface. And when we're looking to see how long those overbought conditions from this level can persist, not very long. So we are really overbought here. You can see we can maybe get a little bit more on a percent of stocks above their 50, but in most cases, we're near-term overbought on all three of these. And typically, they don't hold those overbought conditions for a long, long amount of time.
Okay, SLV, should you use silver for a long position?
Well, I will tell you in general, I would because of the volatility of the market, I wouldn't consider really any or most of my portfolio as intermediate to long term, because with this kind of volatility that we're experiencing, you really need to be managing in the short term. So I'm just going to say that right out the gate as far as owning a position for a long time. There are exceptions. A few of you know my exception right now. So, but that you have to go in eyes wide open if you're going to be a buy and holder. So it's not too far from overhead resistance right now, but with gold looking good and silver has been traveling mostly with gold, let's do a correlation just to make sure. And we're going to make it to GLD. So you can see that they tend to be correlated highly. And with silver showing a nice high correlation of 0.94, looking at the gold chart is every bit as useful as looking at the silver chart. And both of them look pretty bullish at this point. The one problem we have is, like I said, overhead resistance is arriving pretty quickly. Looks like a little bit of a shooting star kind of going on here as far as the candlestick, but overall, I'm still bullish on metals. I think silver looks pretty good. Let's look at a weekly. Yeah, this level of resistance really only lines up right about here. I guess you could say it lines up with these lows and this top as well. So there is some overhead resistance it's going to have to deal with, but boy, the weekly PMO looks good. It's got a nice high scooter amongst all of the ETFs. Sorry, I should have made that bigger. So we are getting ready to hit that overhead resistance. But I like silver. I like gold still. So there you go.
ULTA.
Ulta. All right. Nice breakout for Ulta here. It is in consumer discretionary, which has been doing fairly well. Ulta traveling in line with its industry group, which is A-OK, since you've got the industry group starting to outperform the S&P. Consequently, it's slowly starting to outperform the S&P. So I think all good there. Like I said, I like the breakout, PMO on a new buy signal. This looks really quite good. Let's look at the weekly chart, though. All right, it's at all-time highs. We look at the monthly. Yep. So it's flirting with all-time highs now. So This is probably going to be filed under a winner that keeps on winning at this point. Everything looks healthy on it. It's hitting all-time highs. RSI, though, is not overbought. PMO is not overbought. I like Ulta. It looks pretty good right now. 5-minute candle. The buy point came in back here right around 547.28. And currently we're at 548.33. So certainly it was a better buy point. PMO flattening, but doesn't look like it's going to give us a sell signal at this point. Did hit overhead resistance. I think I'd be waiting on this one to pull back because the PMO has flattened. So there is the possibility that we're going to get a pullback. But if it ends up just being a pause and it starts to head back out to break out again, that's probably going to be the best buy point you're going to get today.
FNGU.
All righty. Breakout. Near term, it is now starting to consolidate that breakout, pulled back to the breakout point, which is good technical analysis 101. That's what we want to see. It is a huge decline. So I'm sure it's like, oh my goodness. But it's still holding above this overhead resistance level. It is an inside day, meaning that the candle body is inside the candle from before. That's not bullish or bearish. It just tells you there's some indecision going on there, which makes sense. We had that big move. It's time to, like I said, work that out. PMO is not disturbed by an almost 5% decline. So that tells you something. Stochastics remain above 80. Let's see. Everything looks pretty good on this one. This is, however, a 3 times leveraged ETN or ETF, same sort of thing. So just remember, you're going to get fluctuations like this. This is not just today. It happens to be down by a lot. It's going to be down a lot and then it'll be up a lot because of the way it's leveraged. So just keep that in mind. It is dangerous if you're going to, as a hedge. I think it's not a bad idea for a hedge, but just like I said, be really careful with these juiced ETFs. Make sure you know what you're doing when you get in them. Just be prepared for a lot of volatility.
Yes, leveraged ETFs are really great if you're in a hurry to lose your money.
Right. So just be really careful there.
Yeah, try options. It's even faster. Okay, J&J. J&J.
Yes, Johnson & Johnson. Okay. Well, we looked at healthcare. Healthcare is starting to break out of a declining trend. Right now, we have a nice, looks like some congestion here, but we're trying to break out of it. Stochastics look good. PMO is accelerating higher. I like that the RSI is positive and not overbought. When I see an accelerating PMO, I almost always expect the RSI to be overbought, and it isn't in this case. Got above the 20. We have a 5-day EMA cross above the 20-day EMA. That's a short-term trend model buy. I'm not really thrilled with relative strength. Relative strength is kind of petering out against the S&P. And you do want to see that outperformance because you've looked at them. We've seen other stocks where relative performance is increasing against the S&P, not declining. So keep that in mind. But it's doing the right thing. It looks like it's having a nice breakout, getting ready to hit the 50-day EMA and this level of overhead resistance with this touch, that touch, that touch, this touch. I always talk about touches because the more touches you have to a support or resistance line, the stronger it is. So it's going to take some effort to get it to push through this level of overhead resistance, but it's certainly got the momentum to do so. And it is breaking out currently right there. So looking pretty good here for Johnson & Johnson. I'm just not thrilled with relative strength. 5-minute candlestick. We're not at a buy point. In fact, we just had a sell point come in. You can see where the PMO, the 5-minute PMO turned over. So if you had gotten in, let's see, your buy point was back here, that would have been at about 155.20, and your sell point came in at about 156.50. So not a little, it does help you with getting you in with a little bit extra I'm losing my mind here. You'll be able to get more out of your entries and exits by using these 5-minute candles, basically, is what I was trying to say.
EPM.
All right, nice breakaway gap here, pushing it above the 200-day EMA. And not surprisingly, it's hit this level and is, I wouldn't say struggling, but certainly pausing. PMO looks good. Relative strength looks better than what we were seeing on Johnson & Johnson. Let's see, this is due to crude oil for the breakout, but it certainly has a lot of upside potential. Next level, I mean, I guess you could say that would be a bit of a resistance level, but that's a little over 5% away. This level here would be about 12% away. So there's a lot of upside potential on this one, Evolution Petroleum, and everything looks pretty strong here. Question is, where would you enter on a day like today? Well, it looks like you might have the opportunity to enter at a better price than if you had tried to get it earlier in the day. And with the PMO still pushing lower on the 5-minute chart, I would say you're probably going to get an even a little bit better buy point coming through there.
CAH.
All right, double bottom confirmed, but it's already reached its minimum upside target. Not to say when you talk about chart patterns, it's the minimum upside target, so it certainly could move further. PMO suggests that, well, RSI positive, stochastics above 80. I like that it's outperforming the S&P right now. Overhead resistance is pretty darn close, though. That's about 5% away. So you have, when I do this, it's not that I'm saying it'll stop there forever. What I'm saying is this is where you might look for a pause or a little bit of a pullback. So do you want to get in and move up 5% and then deal with a 2% pullback right after that? Well, you might have to when it hits that overhead resistance. So that's why I always measure kind of how far we have before we hit overhead resistance. Looks pretty good other than that limited upside right now. Let's look at the weekly chart. We haven't looked at too many of those. Getting ready to come back toward its all-time high. And again, that's pretty much about 5.5% away. Weekly PMO trying to turn up. So scooter turning up. It's not in the hot zone above 70. I call it the hot zone because it means that it's if it's at 70% or better, the scooter, the StockCharts technical rank, that means that based on trend and condition, primarily in the intermediate and long term, is favorable against its relative strength to all of the other stocks. So if we take a StockCharts technical rank, we do the calculations, you come up with a number. That number is compared to all of the universe of that particular stock. And in this case, it would be the large cap universe. So amongst all large caps, it's 62.8% better than, well, 62.8% of the stocks. So you know that you're looking at something that's showing strength in the intermediate to long terms. It does have a short-term component, but the short-term component, I think, is only 15% of the calculation.
Apple.
Apple.
I just skimmed it, so yeah, it needs a little more.
We'll do a little more here for it. So shooting star right now today, which means you've got this long wick on that candlestick. You know, as far as what's going on under the surface, It looks like it's starting to underperform just a little bit, which does give me the hint that maybe technology is ready for a bit of a rest, since Apple makes up, because of capitalization, if you're buying XLK, you're buying a lot of Apple. Stochastic's positive. It's gotten above this area of overhead resistance. I do see a rising wedge, though, which, again, there's a few things on here that are a little bit that are a bit of a problem. So we're hitting the top of this wedge. There's a good chance we're going to come back down, and the wedge suggests we're going to get the breakdown here too. But indicators still look pretty positive. Let's see, what is our upside potential here? Before it hits, it's less than 7%, like 6.75% away, where it might start struggling again. But, at this point, everything looks bullish enough. I mean, the indicators look good enough. My biggest thing would be the fact that relative strength is starting to move sideways. And again, since it makes up a lot of the market and the SPY, seeing that relative performance starting to lessen could be, honestly, a very early sign of trouble ahead. So overall, Apple, I'm bullish on. I mean, it still has some upside potential here. It just seems kind of limited right now. So I don't know that I'd be getting in it right now.
Okay.
Definitely not now.
A minute and a half for Netflix.
All right.
He wants to know if that's current upside potential.
Certainly does. Look at the PMO hitting above 0 right now. Stochastic's above 80. I like the outperformance against the group. It needs to be outperforming the group, since the group is starting to underperform the market. Working out okay for it. It's strong enough. It's outperforming the S&P. Upside potential at this point, based on where overhead resistance arrives, is about 9 to 10%, I would say, when it hits there. So I think you've still got about a 9 or 10% move. Right now, it looks like it's struggling just a little bit against short-term resistance right here at these lows. But given these indicators, I would expect the breakout coming in. Quick look at the weekly chart, and that level, it could go a little higher than that. You can see there's resistance over here that it's going to have to face, but that's about 14% away. PMO weekly looks like it is turning up above that signal line, which is especially bullish. So Netflix looking good still.
Okay, that's about out of time.
That is it. Sorry again about getting that room started improperly this morning. And I'm sorry Zoom did not send out the messages. Just remember that you'll always find the latest DecisionPoint trading room shows on the StockCharts TV YouTube channel. We're getting our YouTube channel put together. So if you do look it up, you're welcome to like it. It's just not completely, the scaffolding is still up. That's all we have for today. I'm going to wish all of you good luck and good trading, and we will see you next Monday.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.